Hey YouTube family, Mike Jones here, back with another video on my channel where we talk about all things investing in personal finance with the genuine hope that I will be able to inspire someone to go ahead and get started with their financial freedom journey today. With that said, today we're going to go ahead and be talking about my Fidelity portfolio and giving an update on everything that's happened in the portfolio. I'm going to be talking about the stocks that I sold, stocks that I bought to replace those stocks that I sold, and then we're just going to go through every single stock that's in the portfolio. This is my final video for the Fidelity portfolio. As like I said in the previous video, I haven't seen much interaction or much feedback on this Fidelity portfolio. So I'll just kind of keep it to myself until it's something that comes of interest to my audience. But with that said, thank you so much for watching this video. If you take a short moment to go ahead and smash that like button, hit the subscribe button, and hit that noti bell so you never miss out on any content that I post for this channel, that would be really awesome. I know that this video is going to take me a very long time to edit, as I'm expecting it to be about an hour-long video. With that said, thank you so much for watching, and we're going to get right into it. God bless. Hey YouTube family, so like I said, we're getting right into it. This is my Fidelity portfolio. As you can see, the value is at $51,332.78 right now. So that's absolutely phenomenal. Before we go ahead and get into all the positions that we have, I kind of wanted to give you a little bit of insight on the activity over the last week or so, because I did make a couple of adjustments over the last couple of days. So starting on September 17th is where everything happened. So everything that's in here is mainly a extremely great growth stock or a dividend stock. It's one of those two. Either it has a huge dividend history, and it's very reputable, or it's a reputable growth stock. So we're taking this portfolio super seriously. And as you can see, like I said, we went ahead and bought AT&T. It doesn't say how many shares specifically, but we bought back in, I think it was about 30-ish shares of AT&T. We also went ahead and got Allstate. I believe that's one more share of Allstate that we went ahead and purchased. We went ahead and sold our American Airlines stock. We're up 100%. So American Airlines is not one of those companies that I see for the long term, like being invested in. It's more of like a swing trade type of stock. Those cruise stocks and most of the airline stocks. That's what I would, and some of the gambling stocks. That's what I would prefer to use those stocks for, is like to swing trade, buy low, sell high type deal. We also have Anheuser-Busch and Bev. We went ahead and sold the 2 shares that we have. Now they do go ahead and produce Budweiser, Bud Light, all that kind of stuff. But when I really thought about it, am I really trying to be invested in, or like beer? I'm not really trying to be invested in beer. If I really think about it, there are way better things to be invested in. We have Facebook, Apple, Tesla, Amazon, AT&T, Verizon, Coca-Cola. There's so many more companies that I'd rather put my money into. And so that's why I went ahead and sold that off. We went ahead and sold Bristol Myers and Squibb. And that was just because it really hasn't moved since we bought it. And since we weren't at a loss, we just took the opportunity to go ahead and sell it, because I'm not planning on investing any more money into Bristol Myers and Squibb at this moment. We also had Chevron Corp. We went ahead and sold that off as well. I just felt like we had too many energy stocks, and so I went ahead and sold some of that. I sold some Coca-Cola just to free up some cash so that I could buy Pepsi and other stocks that I felt were more important than prioritizing Coca-Cola at this point. One of the downfalls of Coca-Cola is the fact that they are only allocate all their moat to Bev. And even though they have a very, wide moat when it comes to beverages, that's all they are specifically in. They do specialize in that, but Pepsi is a better option as far as something to invest in, due to the fact that even though Both are solid. If you had to choose between the two, Pepsi is not only in Bev, but they have food products as well. And so they've produced a wide moat off of that as well. We also have Comcast. I'm not planning on investing more money into Comcast. I'm not planning on investing more money into Duke Energy, Fastenal, HB Fuller, General Motors. They're on my crap list right now due to everything I went through with my car. Halliburton was a company I went ahead and bought. I knew they were at an underpriced value when I went ahead and bought them. They went ahead and returned about 100% to me. So it was time to go ahead and get rid of that. Hasbro did great for me, but am I really thinking about, investing more money into Hasbro? Probably not. Keurig Dr. Pepper, same thing. There's better companies to go ahead and invest my money in, Coca-Cola and Pepsi, for example. Lowe's, I went ahead and bought a share of Lowe's because I love Lowe's. I actually absolutely think that they have a great future ahead of them. For a lot of people that don't know, during the pandemic, Lowe's and Home Depot had a great time because a lot of people spent most of their time doing a lot of remodeling, home repairs, all that kind of stuff. People were buying houses still. And so Lowe's and Home Depot were two of the places that strived during the pandemic. We also have, we bought another share of McDonald's because it's a company we believe in. Now, McDonald's is our favorite uh, like our favorite food and beverage company slash REIT. It kind of encompasses all of that in one stock. So I thought it would be solid to go ahead and buy another share, even though it's up right now. We did go ahead and sell off Merck & Co., another company that didn't really do much. It was great for having it during the pandemic, but you know, it wasn't doing anything for me, so I went ahead and sold it. We have Mercury General Corporation, another company I don't know that I will be investing more money into. Meredith, I believe I had two shares of Meredith Corporation, and so I went ahead and sold those as well. Another company that I found at an undervalued price during the pandy, and just don't need it anymore in the portfolio. Molson Coors and Bev or Tap. It's another beer company that I just don't need to have in the portfolio. We're really trying to focus on growth and dividend income in this portfolio. So having Molson Coors and Bev really isn't going to get us there. Nintendo, um, I went ahead and looks like I bought another share of Nintendo. Not mad at that at all because I do love some Nintendo. I really believe in what they do. I'm a huge proponent of, growing up with Pokemon and stuff like that. So I'm totally behind Nintendo on that front. Novartis went ahead and sold them. It was an ADR anyway, so probably wanted to get rid of it in the portfolio. We did go ahead and sell off some One Oak. Like I said, I just feel like I had too much energy, even though they give a great dividend. I wouldn't say that One Oak is a company that's super stable. And so I'm kind of reducing my risk by taking some profits there. We did go ahead and buy two shares of Pepsi. As you can see here, we went ahead and sold off Pfizer. Um, it accomplished its purpose for us, essentially. It did what it was supposed to do, and now it's just time to move on to bigger and better things. Simon's AG, same thing. Southwest, I went ahead and took some profits on Southwest just because it is an airline stock. And even though it's the one that I'm most gung-ho about, most bullish about, it just, you want to reduce your risk if you can. And so I went ahead and took a couple profits on that. We had Stag Industrial, which we went ahead and cashed out. The reason for that is because we really don't want too many REITs in our brokerage. If we're going to have REITs, we're going to focus on putting those REITs inside of an IRA so that it kind of reduces the tax risk for us. I think that's a great strategy to have. We also went ahead and bought another share of Starbucks, even though it was up. I've told you, that I really want more Starbucks. So I'm just putting my money where my mouth is. Tangery Factory outlet was up like 150%. So, or it might have been up even more than that. But we just went ahead and got rid of it because do we really want a whole bunch of Tanger Factory outlet in the portfolio? No. We want to focus on solid stocks. So we went ahead and bought 3M instead. And so I believe we bought 2 shares of 3M. Um, or it might have been 3 shares of 3M, which is really awesome. We also sold Tyson Foods, another company that we do think is solid, but it's just not our priority in the portfolio right now. U.S. Bank Corp, another good company, just not the priority. Vanguard Real Estate ETF, I'm sure a lot of you are surprised I sold that. I am a fan, but right now I'm trying to either do growth or dividends, and the Vanguard Real Estate ETF really doesn't do either or. I mean, it gives a nice $3 dividend, but the growth isn't crazy. So I just felt like the money could be allocated to better investments. Whirlpool bought another share of that. Big fan. And then we received some dividends here, um, especially from eBay, Molson Coors and Beverage, Waste Management went ahead and took care of us, and that looks like all the uh, all the purchases that we decided to make. We did receive a huge dividend from Dick's Sporting Goods, which was expected when we bought the shares. They had a special dividend announcement, and we bought before the special dividend announcement. So $22 that's reinvested into the portfolio, which is really nice. So next up, we're going to go ahead and hit the positions, and we're just going to go ahead and look at everything. Now, when I sold those positions that I was talking about, I did lose some gains. So my gains were initially almost $20,000, but selling some of those positions made me lose some of my gains. But in the long term, I believe I'll regain those gains back. And plus, I'm in more solid companies. So sometimes you have to take profits, especially when it's in shakier stocks than you would like. So that's essentially what we did. But starting at the top, we now have Apple, 30 shares of Apple, a current value of $4,421.55. We are up $1,258.30 for a almost 40% return. Now, we'd love Apple to slow down so that we can get to 100 shares in Apple before it decides to explode to 250 or whatever it decides to go to. But that's a little unrealistic. So we'll just keep on buying at whatever share price because Apple's one of those companies that you can really do that with, I believe. Another company you could do that with is AbbVie. I think AbbVie is super solid. I think it's got tremendous growth opportunity in the next 5 to 10 years. And so this is a company that I am putting where my money where my mouth is. And so even though we're down $11.47, we are not concerned at all. Abbott Laboratories, we have 1 share of that. We would love to go ahead and buy some more shares of Abbott Laboratories. We just haven't had the opportunity. Aflac, we have 2 shares of Aflac. We've gained $31.38 on Aflac since holding it, so that's a 42% return. Assurant has done well with the 1 share that we have. It's up $53.59 for a 49, almost 50% return. Allstate, like I said, we just bought another share, and we're up $26.35 for an 11% return. Amgen, I'm not sure what to do with Amgen yet. Still kind of deciding. I might end up selling Amgen and just buying some more Apple, or buying, Apple and Abbott Laboratories or something like that. Haven't decided what to do with Amgen. It has been on the decline, so I'm not sure what to do. I think it's a solid company. I'm not sure what exactly has been going on with it, but I might just keep it in the portfolio as well. We'll just have to see. Next up, we have Amazon, which really needs no introduction. We do have 1 share. We'd love to get that to 2 shares at some point. but we are up $1,534.99. That's an 81% return. So we're happy to see that. We also have Broadcom or Avgo. Um, we are up $369.84 for a 56.45% return, which is absolutely fantastic. We won't be buying any more Avgo at this point because the price is too high. Now, if they do go ahead and split the shares, I think we can go ahead and consider that. Um, we do have one share of Boeing. It's up $121.73 for 122% return. Now, Boeing is in this portfolio, but in the near future, you might see some Boeing in my Webull portfolio because that's where I'm focusing purely on growth in that portfolio. So don't be surprised if you see some Boeing in that portfolio. We have BCE, which is up $8.11 with the two shares that we own, which is an 8% return. So we're cool with that. We also have BlackRock. We have one share of BlackRock up $315.22 for a 55% return. So not mad at that at all. We have Bank of Montreal, which is we have two shares of that, and it's up $100.05. So it's almost a 95% return on that position. So pretty happy with that. Bank of Nova Scotia, we have 23 shares, up $365.92 for a 34% return. We have BP, 5 shares here. BP and ONEOK are the only two energy companies that I believe I have now. So this one's up $38.66 on 5 shares. So that's a 41% return. Berkshire Hathaway is a great company. As you can see, we're up $91.99 for a 49% return. We have Caterpillar, which is up $183.68 for an 85% return. We have 2 shares there. We'd love to get in and buy some more, but it is at almost $200 a share. So that's kind of tough to do if you're a regular person. We do have 1 share of Colgate. We'd love to go ahead and buy more shares of Colgate. It's up $7.91 since we purchased it. And so that's 11% return. We have Clorox, 3 shares of Clorox. It's down $81.10 for a 14% loss. That's really attractive because I truly believe Clorox is a solid company. And I'm not sure what the decline is about for Clorox, but to be able to get Clorox at a decline like that looks pretty good. But maybe we'll wait until it's a whole share price. So like if we lose $164, $100, something like that, then we'll think about purchasing some more Clorox because it'll be too good of a price to ignore. Next up, we do have 1 share of Costco. It's up $160.96 since we purchased it for a 52% return. We have Canadian Pacific Railway. I'm not really sure what's going on with Canadian Pacific Railway, but this is kind of what I alluded to with stock splits. You never really know how they're going to go. For this one, it decided to go down. Some stock splits, stocks decide to go up. It's just one of those things that happens, and you really can't predict what's going to happen. Anyone who tells you can predict the market is lying to you. We have CVS Health, and so we have 1 share. It's gained $18.72, which is a 28% return since holding. We also have John Deere. We absolutely love John Deere. We'd love to get more shares of John Deere, but unfortunately, we just don't have $350 to spend on John Deere every single week. And so we've gained $191.46 on the share that we have for 121% return. We also have Diageo, which is up $49.16 for a 34% return, which we're really happy with. We also have Disney up $72.51 for a 70% return. Not sure if we'll buy more shares of Disney, but it's something we are considering. We have Dick's Sporting Goods down $34.83 for a 6% loss. Are we concerned with that? No, not at all. It's just one of those things that happens when there is, a special dividend announcement, or people see the quarterly reports, they decide to sell out of it, and so that's why stocks decline. So, not at all concerned. We might end up buying another share if it decides to decline to like I want to say like $100 a share. That would be really cool because then we could really lower that cost average. But next up, we have eBay. We have one share that's at $24.44 grown since we purchased. So it's an almost 50% uh, growth rate there. We have Eaton Corporation. We have one share that has grown $67.72 to date, and it's up 76%, which is pretty fantastic, kind of unexpected. Facebook, we have one share that's gained $142.96 for a 68% return. So shout out to Facebook on that front. We have Google, which is at a current valuation of $2,844.30, and we've gained $1,754.84. Probably the best decision I ever made was purchasing Google, Amazon, and Tesla. So it's up 161%, and we're just going to keep it going. I hope to go ahead and purchase at least one or two more shares of Google because I don't think its growth is going to falter for a very, very long time. We do have one share of Goldman Sachs, and we've gained $186.59 for a 91% return. Because Goldman Sachs is so high, we haven't been able to purchase another one yet, but we do like Goldman Sachs. We do have W.W. Granger, which has gained $76.50 for a 23% return. Not too bad. But next up, we do have Home Depot. If you know me, you know that I love Home Depot. I just think that the price is too high for me right now. But we've gained $80.54, so 30% return so far. Hershey, this is a company I debated getting rid of because I didn't know if I wanted to keep it, but I ended up getting rid of Mondelez. So I decided to go ahead and keep Hershey around to have some kind of candy stock. So we've gained $38.67 for a 28% return so far. Um, if we don't get rid of it, we'll probably end up investing more money into a couple more shares. Hyliion Holdings has been murdered over the last uh, 6 months. So it's down $16.82 for a 64% loss. We do only have one share in this portfolio, and that's because most of our speculative stocks will be in the Webull portfolio. If we have um, speculative stocks, that's where you'll find them. We just bought this one like 6 months ago, so when it hits a year, we'll probably end up getting rid of it regardless of the price. Or we'll continue to keep it and hold it and see if it turns around and makes us some profit. But we're at least holding it for a year. Next up, we have 12 shares of IBM. We have $65.70 loss so far for an almost 4% loss. IBM, a company I truly believe in, not worried about them at all. Um, for me, IBM and Apple kind of go hand in hand. I'm going to be like alternating, you know, positions, buying shares in each one. So when I have a lump sum of money, I'll probably just split it between IBM, AbbVie, Abbott, and Apple, and that's how I'll do it. So like one share for each every time I have money. Johnson and Johnson of $15.73 for a 10% return. Not too bad. Not too crazy either. Its dividend is really nice. That's why most people have it in their portfolio. Kimberly and Clark, a company I believe in. It is down $7.68 right now, and it hasn't shown promise of much growth over the last year that I've had it. But I'm going to continue to hold. I believe in their business model, and so I really see them being profitable in the future. Coca-Cola, we did reduce this position by 5 shares, so we only have 10 shares now, but still a good position. We've gained $3.42 $3.42. So not too bad. Makes about 1% of the portfolio. We do have Lockheed Martin. We have 2 shares of Lockheed Martin, and we've lost $50.62. If the price gets attractive enough to where I can get a share of Lockheed Martin for $300, I'll probably go ahead and pull the trigger on that, because Lockheed Martin isn't going anywhere. Um, we have Lowe's. We just bought another share of Lowe's. We are up $77.31 with the 2 shares we have for a 22% return. Can't complain about that. Lamb Research is incredible. We have 1 share of Lamb Research. It's gained $3 or $300, $339.65 for 125% return. If it wasn't $610, we'd possibly buy some more. We have Love or Southwest. We did reduce this position by 6 shares. So now we only have 10 shares, but it's still up $155.66, which is fantastic for a 41% return. So we really can't complain. Um, Next up, we have Main Street Capital. We've gained $48.87 on the 4 shares we have. So our 41% return. Really can't complain about that. We do have Mattel. If you haven't heard the story about Mattel, the reason Mattel is even in the portfolio in the first place is because it reminded me of my dad, who used to buy me Hot Wheels when I was a kid. And he really tried to teach me some valuable lessons that I didn't learn until adulthood. But they're important to me now. So, regardless of what happens with Mattel, the plan is to buy like 43 extra shares in tribute to my dad. So that's the plan there. But the 1 share that we have right now is up $11.70 for 144% return. McDonald's, we have 2 shares and we just bought a share. So it makes up almost 1% of the portfolio. We've gained $69.64 for a 16% return. So really solid there. I thought we got rid of Mondelez. Apparently, we didn't get rid of Mondelez. So we kept 2 candy companies in the portfolio. So I do apologize for that error. But it's up $10.20 for a 19% return. Now that I think about it, the reason that I may have kept Mondelez and Hershey is because Hershey is more allocated towards U.S. It kind of controls like the U.S. Candy industry, if you will. Uh, but Mondelez kind of is those international waters, making sure that I have some moat over there. And so that's why I have Mondelez still. MetLife, we do have 1 share of. Um, it has gained $27.86 for a 79% return. So that's insane to even think about. We do have 3 shares of 3M. So I definitely believe that I bought 2 shares, and we are up $31.90 for a 6% return. 3M is going to do great things in the near future, so not concerned with that one at all. We do have Microsoft, and so Microsoft makes up about 0.5% of our portfolio. definitely want to go ahead and get at least one more share of Microsoft in this portfolio. You might see Microsoft in Webull as well, because that is more of a growth portfolio. But we're up $115.98 for a 62% return, and you can't complain about that. We do have NGG, 5 shares of NGG, up $3.02 so far. So not too much growth on NGG, but we do believe in the company, so we'll see what happens there. Nike, we have 1 share of Nike, and it's up $61.14 for a 68% return. Not too bad there, Nike. Keep it going. We do have Nintendo. We just bought another share of Nintendo. Altogether, it's up $10.06 for a 9% return. So really can't complain there. Definitely want to get that position of Nintendo to like 10 shares. So we'll see what happens there. Nvidia, fantastic company. We have 4 shares of it. We have gained $530.65 for an 150% return. Um, Honestly, we want to go ahead and buy one more share of Nvidia, and we're going to cap it at those 5 shares. So expect to see that in the near future. We'd love for an Nvidia to grow again, split again, and then give us like 16 shares or something, or 20 shares when we have that 5th share. So we'll be holding on to Nvidia for the long run. We do have Realty Income. We have 1 share uh, and we've gained $13.45 for a 24% return. Now, the reason we only have 1 share is because we realized that we could get tax breaks if we invested, REITs into an IRA instead of a brokerage. And so we're really trying to avoid buying Realty Income and other REITs that we may have in the portfolio until they're at like a really nice reduced price. Like if it gets back down to $55 or $50 a share, then of course I'll go ahead and put some of it into the portfolio. I'll probably max it out at around 10 or 20 shares, and we'll do it like that. But until then, we're just gonna hold the 1 shares that we have. Um, we have one or OKE. We have 10 shares. We just reduced this by 5 shares. And we're still up $137.28 for a 30% return. So we really can't complain about that. We do have Oracle Corporation. We have 1 share. It's gained $38.22, and we are up 72%. So we really can't complain about that. As far as investing more money into Oracle, yes, I want to invest more money into Oracle, but it's kind of down the totem pole as far as where it is on my priority list. I'd much rather invest in companies such as Pepsi, like I have here. We now have 5 shares of Pepsi. We've gained $52.51. And we're going to keep on growing Pepsi, growing our position in Pepsi. We'd love to get to 10 shares at the very least. So expect to see that in the portfolio for the long term. We do have 1 share of Public Storage, which has gained us $98.57 for a 46% return. So we really can't complain about that. We'd love to go ahead and buy at least 2 more shares of Public Storage at some point at that $300 price. We do have PayPal. We have 1 share that's gained $122.62 for a 78% return. So that's really cool. Definitely want to buy more shares of PayPal. We'd like to get it to about 5 shares in the portfolio. Qualcomm, 1 share so far. We've gained $44.76 for a 49% return. Can't complain about that. We'd love to put some more into it. Maybe get to 5 to 7 shares of Qualcomm. Royal Bank of Canada, we have 1 share here. We've gained $40.42 for a 64% return. Really can't complain about that either. Do want to go ahead and invest a little more money into it, but I feel like we should wait on that just because we may be able to get in at a lower position. But you never know about these things. If I, come upon some money or I make a lot of money in the new job that I just received, I'll start just going ahead and investing money into all of these stocks one by one. And so that everybody gets a little more in the position. Starbucks. We have two shares now because we just bought another share and we've gained $49.19 for a 27% return. Really can't complain about that. Charles Schwab is a company I believe in. It's gained $40.82 so far for a 115% return. Would love to go ahead and buy a couple more shares of Charles Schwab as well. Sherwin-Williams, we have three shares. So far, they've gained $344.03 for a 64% return. Love that. As far as would we like to invest any more into Charles Schwab, I think we can go ahead and buy one more, in Sherwin-Williams. I think we can go ahead and invest at least one more share of Sherwin-Williams. I think that's what we'll end up doing. I believe Sherwin-Williams was a company that I bought at $536 and then it split. So don't quote me on that, but it's great to see that it's still continuing to grow even after the split. We do have Shaw Communications, which is a company that I really want to build up in this portfolio. I want to put Shaw and TELUS in here. Because those are two Canadian communications companies that I really believe in. So yeah, that's my next move is to get 100 shares of each in this portfolio. And that'll provide great dividends for my portfolio as well as there's potential for growth as well. As far as Shock goes, it's gained us $11.34, which is a 24% return on the two shares that we have. So it's kind of had its growth, but still a solid dividend company, still solid for having growth. So we'll continue to invest in that for sure. Snapchat has been the surprise of the decade, really coming out of nowhere, being, a stock that I got for free. I got all 5 shares for free at an average price of $8.91. It cost me nothing. It cost Webull $44.55 to give it to me, and it's gained $371 flat for an 832% return. I can't make this stuff up. Really happy with that progress. Would love to see it get to $200 a share. I'd probably sell about 2.5 shares at that point just to take some profits and leave the other 2.5 in the portfolio. Next up, we have Southern Company. We have 4 shares of Southern Company. It's gained $34.30 for a 15% return. A lot of people would be disappointed with the fact that it hasn't grown a ton, but we know that slow and steady wins the race. This is a marathon, not a sprint. So we're really not concerned with how much growth each stock has. We just want to make sure that it's something that we believe in and want to have for the long term. And so that's why you've seen me sell a couple positions, because at the beginning of my brokerage investing journey, because I started investing before the brokerage, but for my brokerage investing journey, I really just bought anything that I thought was a solid stock. And that meant that I would buy 1 or 2 shares of certain stocks because I just didn't have the money to buy all the stocks that I wanted at a multiple of 20 or 30. And I just wanted to make sure that I was diversified. But I felt that I was too diversified. And so I think I've sold stocks in this portfolio about 3 times. And I'm hoping to not have to sell anymore unless I'm just taking profits, but not selling out of a position as a whole, just, shortening that position or lowering that position. Speaking of a company that has really surprised me, SPG. I don't know why I'm saying it really surprised me, because I, basically preached this to people for, I want to say, a good 6 months, that SPG was the move to make at the price that it was at. I was able to get in at an average price of $66.81. And I had seen it at that $135, $140 share price beforehand. So I knew that as long as the company was solid, which I later found out through research, that it would rebound and, that would be some great growth for me. So, my only regret was not getting like 50 shares. Um, so that's essentially it. But like I said, we're up $682.57, which is 100% return. So we essentially 1x on this company. Um, it's tempting to go ahead and just not shorten the position by 5 to go ahead and take those profits, but we'll continue to hold. In the meantime, maybe we can compound some more growth, and then we'll make a decision from there. Stanley Black and Decker, we have one share. Uh, it's gained $75.81 for a 67% return. AT&T, we were able to buy 25 shares, excuse me, not 30. But we're down $12.88, which is no surprise to us because, uh, you know, AT&T continues to decline. So not really too worried about it. We still get that solid dividend for the next couple of quarters. I think we have 3 quarters left before they make this huge transition to split into AT&T and Discovery merger. So we'll see what happens with that. I'm hoping that by reducing and halving the dividend, that allows for substantial growth for AT&T, because the faults of AT&T and Verizon is that they don't really grow much. Both have a solid dividend, but they don't really grow much. So I'm hoping by holding on to AT&T and getting back at a lower price that I'm able to make some growth profits in the near future, at least unrealized, because we want it to grow. And it's not a company we're planning on selling out of anymore. So, yeah. Next up, we have our one call option that we've ever done so far. Um, and so far, it's going terrible because it is based off of AT&T getting to a share price of $55 by January 22nd of 2022. Unfortunately for me, they just announced that dividend cut about a couple of months ago, and so because of that news, it's highly unlikely that AT&T will get to $55 a share by June 22nd or January 22nd. June 22nd, August 22nd of 2022 is a different story because I think it'll start to fly up at that point. Um, since the dividend will have already been cut. But unfortunately, the call option will expire by then, and so we'll lose $13 on this contract. But it costs us $13. So what's $13 to 50,000? So really not concerned about that. We will be getting more into options in the year 2022. That is something that I want to start doing videos on and kind of really ingratiating myself in. Now, it's not going to be the majority of the money that I invest, but it will be like maybe 5% or up to 7.5% of the money that I have to invest, I will put into options. Next up, we do have Toronto Dominion. We have one share. It's gained $16.99 for a 33% return. This is a company that hasn't grown a whole ton, and that is very attractive to me. I'd love to get this to a position of at least 10, 25. If I had the money, I would go ahead and buy 99 shares of this bad boy. But I do not have the money at this current moment. And so because of that, we're just going to have to try to make it work with what we have and, buy in when we have the chance. My next position is my greatest position. Makes up almost 20% of my whole portfolio. It has reached a value of $10,067.07. And so we've gained $7,412.36 on Tesla. a 279% return on the 13 shares that we have. Cannot complain about that at all. It has really done some great things for us. My only regret was not using the 25 grand that I had saved up and had in cash to go ahead and invest all into Tesla, because if I had done that, man, we'd have a portfolio that's over $150,000 right now. But we wanted to keep true to that diversity that we talked about, because you never really know, and it takes a lot of research to be that confident to just go ahead and put into one company. Um, and yeah, that might have backfired on us, but in this case, it didn't. So we're happy with the gains. I'm very grateful for that. We have 10 shares of TELUS Corporation right here. It is up $29.38 for a 14% return. This is a company that I want to definitely extend more money to. We would love to get 100 shares of this company for sure, especially with Shaw Communications. And so that is going to be a plan of ours in the near future. We do have Texas Instruments, excuse me. We have one share of that at $70.46. And we've gained 52% on that position. We do have two shares of Viacom CBS at an average price of $12.78. And so it's gained $54.42 for a 212% return. This was a free share, two free shares that I received from a Webull referral. So that was awesome to get this kind of growth off of two of the free shares that I received. Viacom CBS is a company that we really believe in. And so these are the ones that we bought ourselves. As you can see, we bought them at $25.15. And we still have made profit. So it's up $74.99 for a 74% return. So that's great. We have VOO, one share here that has gained $170.53. So we are up 70% on that position. We would love to get at least five shares of this into the portfolio just to kind of balance things out. We have Verizon. We bought 40 shares of Verizon at an average price of $55.83. We are down $58.72. So it is a discounted price right now, but we'll probably max out at 50 shares until it's at a really nice discount, like $45 or something. And that'll be awesome. So next up, we have Walgreens Boot Alliance. We have 10 shares here. So tempted to buy 15 more shares of this company because I really love it. It's up $95.97 for a 24% return. So really happy with that. If we could, we'd max it out at $50 or 50 shares, even 100 shares if we had the funds for that. Next up, we do have one share of Welltower. Sorry about that. And this is a REIT that focuses on convalescent homes and retirement homes and such. And so that's what they specialize in. They've done pretty well for us, gaining $21.72 for a 34% return. So can't complain about that. Next up, we have Wells Fargo, 4 shares that we bought at $24.45. It's gained $94.70 for a 95, almost 96% return. So really happy with that position. We have 2 shares of Whirlpool. We got in at $173.08 a share. We just bought a new share of Whirlpool, so our gains were better than this percentage wise, but we knew that we needed some more Whirlpools, so we're up $74.17 for a 21% return on that position. We also have Waste Management, 4 shares at an average price of $129.58. It has gained $99.24 so far, which is absolutely fantastic. It's an 18, almost 19% return there. We have Walmart, 1 share of Walmart. We bought it at $122.93. It's gained $20.47 for a 16.5% return. So we're really happy with that as well. And then our account value is $51,331.31. We've gained $18,880.60. So we've gained 58% overall in the whole portfolio, which is absolutely phenomenal to think about, even with the loss that we received from selling some of our positions. We're still up almost 60% in the portfolio. And this is the strategy for the upcoming purchases in this portfolio, is to just kind of heighten the positions I have, and basically make these positions that are a quantity of one, we're going to make those into several, because we're not a fan of just having one, if we're going to really have it in the portfolio. So we're going to definitely invest some more money into this, and with my new job I should be able to do that while also saving up some money. So I'm excited to do that. But with that said, thank you so much for watching this video. If you would take a moment to just go and smash that like button, hit the subscribe, and hit that noti bell so you never miss out on any videos that I post on this channel, that would really be awesome. We are trying to get to 500 subscribers by the end of the year. We are trying to get to 1,000 subscribers by the end of next summer. So if you want to be a part of the journey, if you have any questions or comments for me, make sure to leave those down in the comment section. But with that said, have a blessed weekend, and I'll see you in the next one. Thank you, and God bless.